Hey guys, welcome back. In today's video, we are talking about how the AMC time is ticking, the big bets against the AMC payday, and many more in this video. First thing, look at this. An unspoken catalyst on GME will raise AMC with it no matter what happens. AMC is a ticking pressure bomb with tons of rehypothecated short sales that haven't been delivered but cycled with more borrowed shares. Same with GME. So for those of you obviously who've been keeping up to date, what we have seen recently is that there has been plenty of things happening with GME. Now, how does that relate with AMC? Well, we have to understand that the short sellers are of course the same for both GME and AMC. And so if we are seeing catalysts happening for GME, we will see it actually affect AMC as well, because wherever it's a margin call, wherever it's, liquidity being drained out, all of these things will also have an impact with AMC, and it's why we talked about here. An unspoken catalyst on GME will raise AMC with it. Now, also bear in mind that it's vice versa as well. It's not a case of we're relying on GME. Remember, AMC can be the one to do that as well. And in the past, AMC has been the leading factor. It's just that recently, what we have seen is, of course, more things happening with GME, such as the FTD data that wasn't going to be released by the SEC, and of course others that we'll be covering in this video. And so we have to understand is that AMC is a ticking pressure bomb. We have to understand that there are synthetic shares being created for AMC every single day for the past 4 years, and even every single day now, they're obviously creating shares to suppress and manipulate the price. And the reason for this is obviously very clear. Firstly, obviously, is to damage any investors. And you guys can see is that Adam Aaron, of course, like we talked about, the largest retail investor, and it will definitely have a massive impact on him when you see the price, of course, going down. And you can imagine, and this is only an example, I'm not saying that this is what's happening, but of course, when you're seeing your share price obviously go down, you tend to sell your shares, or at least that's what they want you to do. They want to create the incentive to obviously sell your shares. But you have to understand between are you selling your shares because the company is actually doing bad, or are you selling your shares because you've been kind of psychologically manipulated to actually sell your shares? So that's the difference that we obviously have to make, and that's what the hedge funds are of course trying to do. And now, because we have to understand there are big things coming for AMC. Firstly, AMC profits are coming, and they're coming consistently. Q2 and beyond are huge. Like we talked about, one of the things that we've seen is how this year AMC has already cut down on their cost. And in fact, the end of last year, they were already cutting down on their costs. So already by knowing and seeing that the operational cost is going down, we know that that's going to increase the profit there is for AMC. But furthermore, another thing to obviously know is that the box office this year is obviously only going to get bigger. And when the box office gets bigger, we're obviously getting more ticket sales. And because we know that there are more people attending, we're able to get more food and beverages sales. We're able to get more, merchandise sales, membership sales, and any other sales that we're obviously able to do. And so what that means is that we'll see the revenue increase as well. So in a year where we're going to get both the revenue up and operational costs down, then we can see how the profits for AMC is only going to become bigger. Another thing for GME, like we talked about, there's a reason why we mentioned GME, because the relationship it has with AMC. You can see Who Wants to Bet Against Kitty and the nearly 5 billion RC has to transform and or stack Bitcoin, or M&A. And so, like we talked about, both AMC and GME are in a very good position. AMC has already shown how their operating systems is obviously working, how their business management, their overall structure is working, and that's how they're obviously able to improve. And so in terms of fundamental wise, in terms of the logistics side, AMC is doing very well. Now for GME, whilst they don't have that whole business structure that AMC has, what they do have is a ton of cash. And that's something that AMC obviously don't have. So you can see how they have their pros and cons. And with GME, whilst they haven't shown that they have a good structure, they have a lot of money, whether it's to buy investments, like we talk about here with Bitcoin. The interest rates that they've collected has been insane, or the M&As. And again, with $5 billion, you're able to do a lot of things. Furthermore, and this is why we talked about why they manipulate AMC. We've been pinned around $3 to $4 for over a year with wicks both directions. They can't take it lower. Bankruptcy is off the table. They can't let it go higher. AMC to raise money. Whenever it breaks, it's going to be explosive. Patience. So let's quickly break this down. Now, the reason why we say they can't take it lower is because there is no thesis for AMC to go lower. Yes, we're seeing the price go to 381, but remember is that previously we even saw it at the low of 238. But it's to understand that when AMC is going down right now, there is no plausible reason for why it's going down. When you take a look at in terms of the buy to sell ratio, more people are buying than they are selling. So naturally, the price already shouldn't be going down. When you take a look at in terms of the sentiment wise, news wise, everyone is saying to sell AMC. But when you take a look at what the retail investors are doing, when you take a look at what the institutional investors are doing, they're all buying AMC. And so sentiment wise, it's still bullish. So now we've talked about two factors. We've talked about in terms of the buy volume. We talked about the sentiment. And when we take a look at the fundamentals, just like we talked about earlier, AMC is going to be seeing a very good year this year. And so even the fundamentals is stating that people should in fact be buying and not selling. So how is it going down? Well, that's clear manipulation. But remember, they can't bring it down any lower because the bankruptcy is off the table. Now, the reason why they can't let it go higher is because AMC to obviously raise money. We've seen how AMC does the share offering. Whilst people are obviously, there are people who are against it, there are people who are with it. You have to understand is that if AMC price were to be at a way higher level than where it is right now, and they do a share offering, they'll be able to make a lot of money. One of the biggest reasons for why GameStop has $5 billion cash is because they're able to do share offering at a high price. Now, shorts have already made the mistake to let GameStop do this, so they're obviously not doing the same with AMC, but then you can see exactly why, they don't want AMC price to go up. Another thing, and what we talked about, the things that are happening with GME. So JP Morgan Chase has removed all GME options buy or sell prices for Jan 17th, 2025. I've been trading on this platform for years, but never seen these zeros across the board. So I'm curious to see if this is still the case for everyone. So for those of you who obviously access to this, feel free to comment down below. But like we said, there's been many things happening for GME right now. Like we talked about, we've seen how, the FTD data at the SEC, they're not releasing. We've seen how the GME prices were showing it was at $1,400. And now we're obviously having, the buy and sell prices obviously removed from GME options. And so multiple things that are happening right now. And it's why we talked about why we could be seeing something actually happening. Another reason to understand, why the shorts are worrying, 168 billion reverse repo. The reason why this is important is to take a note at the liquidity that is out for the market right now. And knowing that they're running low on money, knowing that they don't have that easy access to capital, to liquidity, to essentially the power to use against the retail investors to manipulate, suppress the price. When you see that decrease, it makes you panic. It makes you worry because you're not in that positions to obviously continuously protect your positions, protect your over leveraged positions, and you could be seeing your losses go up into the tens, hundreds of billions, if not trillions of dollars because of the synthetics that you have created. And another thing, and it's why we talked about the sentiment. Earlier, we talked about the sentiment, and we're talking about how whilst a news article is telling you to sell, people are actually buying. And you can see why news articles should be something that should be taken with a grain of salt. And in fact, any information that you gain should always be taken with a grain of salt, and you have to make sure to do your own due diligence. As always, none of this is ever financial advice, so make sure to do your own due diligence and research. But let's take a look at this here. Remember the hedge fund run by a well-known short seller who now also owns a media company? He's looking for journalists, an example of why you have to be very careful of where you get your information. So when you take a look at this, and again, feel free to obviously take a look at this tweet, but a very simple understanding is how Braun Capital turns to journalists to revive returns. And you can see a hedge fund that's also a newspaper. So this is very interesting because essentially what you're looking at is a hedge fund that's making money off of predominantly short, and in fact, just, no matter what it is, longs or short, gets to control something that, would control the narrative of a stock. They control something that could easily change, the price of a stock. When you have a newspaper, and if people were to obviously listen to this and they believe everything that's on there, you can see how easy it is to manipulate price. And when you're also a firm that benefits off of how you're able to manipulate price, you can see how this is very, very worrying. And so it's why we said to be careful where you get information. And you guys, thanks for watching this video. I'll catch you guys next time.